Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock because it goes
selling
down?
a stock because it goes down.
Hello everyone and welcome to the MT Valencia YouTube channel, and today we're going to be giving the update to the portfolio challenge where we're looking to grow the account from $25,000 to $50,000, and this will be the February update. We started the challenge a couple months ago with $25,000, and as you can see today the portfolio sits at $30,965. And what we'll do is we'll take a look at all the activity in the account for the month of February. We'll look at the deposits and any trades that took place, any buys and sells. We'll go ahead and do that now for the end of the month update. And just keep in mind, if you want to find out any activity in the account as it occurs each day, visit the Patreon page. You can see a link to that down in the bottom. It's $10 a month and you'll get up-to-date access of any changes in the portfolio if you're looking to follow along, replicate it, copy it, and you can do that there. So let's look at what we did for the month. We had 2 deposits into the account, each for $521. The first one was on the 3rd of the month, and the second one was on the 17th. So that's a total of $1,042 that came into the account. And let's look at the trades. So when it comes to February, the second day February, we sold our Carvana call. We had bought this. Let's pull up the Carvana chart here and we'll take a look at it. So, and we sold on the 2nd when the market gapped up. We sold at the open. I can pull up the, let's see, it was the 17.5 call. Take a look at it. Whoops, it's not showing. Brought in $475. We had bought it back in November 17th for $1 or $100. Sold it for $475. So we made a profit of $375. And if you go back and you look at the video from January, I talked about how it looked like we're getting ready to have a push up to this 200 period, and I was looking to sell if it got close to the $20 mark. And when the market gapped up here on the 2nd, that's when I sold it at the open. And when I sold out of Carvana, let's see, I turn around, let's see, that was on the 2nd. So I didn't buy anything immediately after that. And then the next position I bought was opened up a position in Intel. Bought 17 shares at $29.90. This was $508. And we'll go. I actually had 2 purchases this month in Intel. We'll go ahead and look at that. So the first one was here on February 3rd. Bought in 17 shares at $29.90. And then on February 24th, I added to the position and bought 20 more shares. So now we hold 37 shares, and we have an average cost on the Intel of $27.27. So down about 9% right now in the position, but that's not a problem. No worries. It doesn't bother me one bit that I'm down. We'll look to continue to accumulate Intel if it continues to go lower from here. I could easily see us retesting this double bottom from October, 24.50. We're 50 cents away from that right now, so we could get a pierce, maybe drop into the 24, and we'll see how it reacts to this bottom from October. It could keep on going lower from there, or it could do a stop hunt, because there's going to be a lot of stops right here at this low. It could be a stop hunt where the price will drop below it, trigger a lot of stops, and those weak hands will sell their shares. And that could be the bottom, and it could turn around and go up from there. Or it could keep on going down. And if it does, we'll continue buying as it does. That doesn't worry me one bit. And then let's look at the other activity. So that was our initial buy in Intel. Then we continue to accumulate more shares in PayPal. So let's see, I think we did a few purchases in PayPal this month. So yeah, on the 9th, we bought 7 shares at $77. And on the 16th, we bought 26 more shares at $78. And we'll continue to accumulate more PayPal. Further it goes down, the more shares we'll buy. So that is no worries there. Let's see. So, and we did sell. We sold our Zillow position. I think if we look at last month when we did the update, we were up about 20% on Zillow, and we ended up selling it for about 35–40% profit. See here, we sold at $49 and a penny on this high right here. This was, yeah, the day after earnings. You can see here Zillow reported earnings. If I remember correctly, it got up to, it popped pretty good after the bell. Let's take a look, see how it did. All right, let's pull up the after hours. Yeah, look, so after earnings, stock popped up to $55. And that would have been the perfect time to get out, but I wasn't at the laptop after the bell release. I didn't notice it. Otherwise, I sure enough would have been selling over 50. But didn't notice, weren't able to get these higher prices, so we ended up selling the next day at 49. So we're happy with that, over 30% profit on that. So we'll take it. And let's see. And as soon as we sold the Zillow, we turned around and put that money into buying that 26 shares immediately after on PayPal. Did a on this, had a order type called a first trigger sequence. So as soon as this Zillow order executed to sell, it immediately turned around and bought the PayPal shares. You can see they were all done at the same time. And then the last trade that was done this month was accumulating more of the Intel at 2504, and I showed you that on the charts. And so right now, our top performing stock in portfolio percent-wise is AMD. Sold to Zillow, so that's no longer represented here. And then after AMD, we have Amazon, and then Carnival. And then PayPal, we've accumulated, like I said, 74 shares so far at an average cost of $78.38. And we have about $5,800 tied up into PayPal. And I'll continue to accumulate more if price allows. And I'm not afraid of holding a $10,000, $15,000 position in PayPal. That would be just fine with me. And we have Ford here, which is a small position, relatively speaking, compared to the others. And Intel, we have 2 purchases on it, so we have about $1,000 in it, and then we have our large position here. So not too much has changed. So pretty much in February we sold out of the Zillow position and we added Intel to replace it. And what we'll do here is we'll look at how the portfolio has done compared to the S&P 500 if the money was put in the S&P 500. So the account value in the account $30,965, and if it was in SPY, it would be at $28,540. So this is a current difference of $2,424. The account is outperforming the SPY. And I think we finished up January. Yeah, so we were outperforming SPY in January by 2,458. And now as of the end of February, we're here. So alpha-wise, we lost $33. So it's pretty much flat considering a $30,000 portfolio. That's pretty much flat. The account for the month was down 2.53%, and the S&P was down 2.64%. And at one point, February got started off real strong. At one point after the second day, we were outpacing the SPY by $3,700. And it was looking like we were going to get 4,000. But after the first few days of February, the market just started drifting down and fading and giving up those gains. So we pretty much finished February alpha-wise right where we finished January. The account has had so far in 2023 21 positive days, 18 negative compared to the S&P, which has 20 positive, 19 negative. Average up day for the portfolio is 1.88% compared to SPY of 0.9. Average down day 1.47% down compared to SPY's negative 0.75%. So this is an average daily return of 0.33% compared to SPY's 0.10. And year to date, the portfolio has returned 13% versus the SPY returning 3.53%. And volatility wise, the portfolio annualized is at 30.75%, with the S&P at 16.22%, and the downside deviation being 14.63%, and the S&P's downside is 9.21%. And with that, it gives us a Sharpe ratio of 0.42 on the account and 0.22 on the S&P. And I didn't add in a risk-free rate of return on the Sharpe ratio or Sortino. And Sortino is 0.89 compared to the S&P of 0.38. So you can see here how the portfolio did each day compared to the SPY, what it would have been. And it's like the high print value-wise was on the second, 32,696. And you see here where the deposits were added in. And when I add the deposits in here, these deposits are also reflected in the balance of the SPY. So it's as if the 521 would have went in and bought more shares of the SPY. So that's how it's reflected there. And if you look at the chart comparing the account, how it's done in 2023 versus the S&P, and you can see it's pretty much the distance between the two for February has remained the same. Like I said, it's down $33 for February compared account compared to the SPY. So it's pretty much stayed the same. And on this February 2nd, I think that was this day right here, we had, $3,700 difference between the account versus SPY, but it came back in to pretty much where we left January. Okay. So that pretty much wraps up the updates for February. It's a shorter month compared to the others as far as the number of trading days. And so for the month, the portfolio was down 2.53% compared to the SPY, which was down 2.64%. And year to date, the SPY's returned 3.53%, with the portfolio returning 13.01%. So if you want to get up-to-date information of all the activity in the account, visit the Patreon page. Otherwise, we'll look to see you here next month.